Hi, this is Jim Allswager, Futures Trading Room Specialist with Microquant and ValueCharts.com. And today is the Trading Room Trade of the Day video for June 6, 2013. We are looking at a 30-minute chart of gold. And as you can see, as we're looking at this chart, for the last several days, gold has been in somewhat of a consolidation pattern, or a wedge, if you want to call it a wedge. And one thing we pointed out in the trading room is that this fuchsia colored line, which is the 200 EMA, when it's flat or close to flat, typically that means that the particular instrument you're trading will be in a consolidation pattern. Bulls or bears aren't winning the battle, and prices will just continue to go up and down. And as you see, the price tested the upper trend line at least once here, another time here, a third time here. As we got to this point right here, you can see that price actually broke out of the upper trend line. Before that happened, I had mentioned in the trading room that when a trend line gets tested this many times, be careful about fading it, that there's a good chance it will break out, and it did. So at that point, we wanted to ask ourselves, what can we do now? How can we get in this rally now that it's broken out of this pattern? So we pulled up a 1,000-tick chart, and here is what we had suggested doing in the trading room. Here is the same upper trend line that gold broke right here, and our suggestion was simply this, that if price comes back down here and tests the trend line, that would be one reason to take the trade. But let's also look at some other reasons to take the trade. So we looked at the most recent significant swing high and swing low. So here's a swing low, here's a swing high, drew our Fibonacci's and put in our 50 and 61 Fibonacci's price retracement lines. And as you can see, price did come back down after the breakout, broke through the trend line a little bit, stopped right in the 50-61 fib zone right here, which I can show you with a ellipse. And then additional reasons that this worked really well is because we had a confluence of other reasons to go long at this point. Not only did we come back and retrace to the broken trend line, not only were we in a fib zone retracement of 50 to 61%, but the 200 EMA sometimes will act as support and resistance. And in addition to that, we also had MQ trend was bullish in an uptrend, and MQ regression was also bullish in an uptrend. So we had made the suggestion to get into a trade here, and as you can see, this turned out being a great trade, and actually price rallied about $20 an ounce or $2,000 a contract. After that, one of our trading room participants had asked if I was bullish in gold, and certainly on that time frame I was because of the breakout, but quickly pointed out that on a larger time frame we went and looked at the daily charts and said that we do have some resistance from about 5 days ago, and be careful and be aware of that. So even after the breakout, sure enough, it wasn't much longer that price actually went up and tested that area. So we really watched gold and did a good job with it, and this turned out being a great trade. We'd certainly love for you to come and take a look at our indicators and ask us any questions that you might have. Go to ValueCharts.com, or you can click on the link at the end of this video. And remember to always manage yourself, manage your emotions, and then manage your trades. Have a great day.